welcome to Trading Lounge and the US indices for the 29th of September. So for the S&P on the weekly chart here, we've been looking at wave 3 here with an A wave, a B wave and a C wave here. For wave 4 is an expanded flat, and we're counting this to the upside here. As you may know, it's possible to have wave 1 here, but my preferred count is that we're still moving up and it will be here. So this is wave 3 here and wave 4 here, and moving up for wave 5 here for wave 1, and then we'll have a larger correction here. And it all makes a lot of sense really, because we've got this old high here, and it's, you know, we've got the elections there and this and that, and you know, to see the market vibrate across the old high here, it just makes a lot of sense to me. So anyway, that's just a sense, a feeling. And also too, with this correction here that we'd been looking at as wave 3 here, and A wave here, B wave here and C wave here for wave 4 here. Now it's possible, as we discussed yesterday, that the market can rally to these 50-60%, the box here, close to the 3400, and then have that as a wave B here, and then come down for wave C. It's possible because wave 4s get complicated, but I've got the kind of sense that that we're basically done and dusted. I mean, we're quite close to the, you know, the 40% retracement level, the 38.2. And also too, I can see that, you know, the market has done everything right that it should do for an A wave here, in that it's moved swiftly down through here, and then we've got the B wave. Now that can be simple or complex, and this leg down here, it's sort of reluctantly moving down, isn't it? Do you know what I mean? It's not like this fast speed here, so it's typical of a C wave here. Is it the C wave of wave 4? That's the question. I think it is, but at the same time we need to just move on evidence. So what we've done is we've traded along here, as you know, so we'll look at this trend here today. But I do think in this box for the S&P, and also the box for the NASDAQ as well, we need to just, well, chill out here and wait until we get a setup to go long again at this point. So that's what we'll sort of be talking about today. Yeah, so look, let's go in and understand this trend a little bit better. But if this wave 4 is in here, we can pretty much look up to 3,800, because the next level from 5 is 8 at that point. And of course there are levels, you know, smaller levels in there. This is just the minor degree of structure here. And also too is the 34 is all, you know, we use Fibonacci as a price ratio here, and 34 is a Fibonacci number, you know, 13, 21, 34. So, but not only that, it's also the old high here as well. And what I find, yeah, what I find is that if I just go back to the daily chart here for a moment. So we've got the old high over here, all right, it's comes through here, and we never really reacted from here. So this is a bit of an overshoot pattern for me. So, you know, normally I talk about, let's just bring these up here. Normally we talk about the classic trading levels pattern, and this is normally the most common pattern here across a level where we have the reaction here. There's a variation on this, and that is where we still get a reaction here, but we don't come below the level here. But the other pattern that we look at is the overshoot pattern. So there's 3 of them where it doesn't stop at the level here. So it just goes straight up, creates the high, and then moves down. And what happens is that if this is the level here at the 34 here, yes, we've been above, and yes, we've been below. So what happens is that the 34 becomes like a balance point in that pattern. And, you know, once that's got support at this level, then it's pretty much up from that point. So this is the pattern that we're pretty much looking at for the S&P at that stage. So just thought I thought that would just point that out. Yeah, so the 34's in here. So normally I would say the distance above is normally the distance below, but I can see that it's dropped a little bit below that. But we're quite close to the 38.2% retracement level here as well. So that's all good. Just coming back to the 4-hour chart here. So I think what we can be looking at here is this looking at a 5-wave sequence to the upside and then a pullback at this point. So we'll try and trade up until this point here, and we'll take a bit of money off the table shortly, and yeah, get this pullback and then look for the 3rd wave to the upside. The risk is, as I mentioned, this whole leg here can be the A wave, will be in a flat correction. So 3 waves for the A wave, 3 waves for the B wave, and 5 waves for the C wave here. That would be the alternative count. So the issue and the problem and the risk is in this box. So in this box here, if we are not holding very much, and we take our time with it and we look for the right setup to be long, you know, a confirmation on that setup, then we'll cruise up here, you know, nicely. Yeah, so we've just got to work through that. So it shouldn't be a big deal. On the 1-hour chart here, so all I've done here is I've just moved the stop up here, and I think that we can take some money off the table here. We'll go in and have a look at this trend here first before we decide where we can do that. The 3400 is where this is all about, so I'll put that in here at the 34, and I've got this as an A and a B and a C up through here, but we can also, because I wanted to highlight the issue that we're facing here. I don't want to just stick my head in the sand. So we'll be looking for a wave 3, 4, and 5 here, and that will be good because we'll see it play out, because that should give us the classic trading levels pattern sitting at this level here, so to speak. Something like this, if we're going to go higher here, you know. That's what we'll be sort of looking at, but we need to understand this better. I'm just drawing out here that this can be an A wave, a B wave, and finish at the C wave, which will be at the same length as wave A, which could be a little bit lower than where I've got it at the 34. So yeah, an A and a B and a C and finish and just come all the way down, or we're going to have 5 waves up. Now, this little move here on the SP 500, it counts as a corrective wave up, and that's why I've labelled it wave A. On the NASDAQ, it counts as 5 waves up. So that chucks a bit of a spanner in the works, but it's good that the NASDAQ has that, and the NASDAQ's count is a little bit like this here. I know that it can be counted, I know that all of this can be counted differently, but it ties in quite nice as it is, and yeah, and we'll just look at this. So we'll have a look at this today too. This little move here counts as 5 waves up, but on the S&P it counts as 3 waves up. So that's it's nice to see that this has got 5. Yeah, and in this case here, this is really all about the 11,500, which is the medium level. It's halfway between 2 major levels, 10,000 and 13,000. So unusual number, I know, but it always works a treat. So the 50-60% retracement level is a little bit higher, so that's going to cause a little bit of difficulty it's going to sort of warp the pattern a little bit, but yeah, it's all going along quite nicely at this point in time, so that's good. We can come back. Well, I'll just go straight to the tick chart while I'm here, and we'll just have a little look at this 5 waves, and then we'll have a look at that on the S&P and show you what I'm talking about here, because this is where the problems can, you know, the devil's in the detail, or God's in the detail, or somebody's in the detail. Wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5, the 3rd wave, 4th wave and 5th wave. It's all a little bit squashy, but you know, that's that can be quite typical of a fifth wave or first wave, but it counts quite nicely as a wave 1, an ABC for wave 2, and then currently building to the upside. So that's how that looks on the NASDAQ. And on the S&P here, I think I'll just go to the tick chart there as well so we can see the same thing. Well, I suppose we could. I mean, I just naturally counted it as an A and a B and 1 and 2 and 3 and 4 and 5, but I might have to reinvestigate this here. But where does that leave me, though? 1, 2, 3, 4, 5. Yeah, I can squash 5 waves out of it, but it just counts better as an A and a B and a C. But it's interesting that the NASDAQ has got that 5-wave structure there. So look, the main point here is that we may have to, we'll probably look at this as wave 1 and wave 2 here. But it shouldn't still, we still shouldn't be thrown off. You know, it's about, you know, gathering these types of events, you know, and noting them, and you know, just to build a case on being it bullish or being it corrective. So the move up here so far, I won't bore you with it, but 1 and 2, and then all the way up here for 3 here. This wave 5 of 3 here, that can actually be also sitting, copying that can also be sitting over here for this here, and we have wave 4 here. So we're looking at this still building because we've only got 3 waves in this move here so far. So we should push up from here based on that. But we're still away from what we've got here is just in terms of the levels. We're looking at 34, right? We have got support on 30. Well, let's just bring this up here a bit further to the 50 here. So we're gaining support here because we were resisting. This is the midpoint here. So we've got from 300 to 400, we've got group 1, which is 10, 20, and 30, 1, 2, 3. Then we've got 5, which is the midpoint, and then we've got group 2, 65, 72, and 80. So we can expect a correction in here. Just forget about all these numbers here for a moment. We have got support on the midpoint, on the 3350. Now that may come down here again here. I'm not quite sure how this pattern's going to, I can see that's not completed, but it could just drop here a little bit, not a big deal. But there will be a correction in this space here. And then we really want to get to this point here for this. So let's just see what have I got on the 15-minute chart? Probably, oh yeah, I've got something here, but I've just copied that from the tick chart, so that's not going to be helpful. So sorry, just thinking. Look, it's probably not such a bad idea to take a bit of money off the table at 3772, which is the center of group 2. Or you can hold on to it. I'll let you decide what you want to do. But if you don't take it there, then we really need to... what's the best way for this? I mean, if I was confident and I know that this here was not a B wave and it was just wave 1 here, then I probably wouldn't probably make a move on this. I'd probably stay with it all. But I think that we should take the money off the table at the 34. You could probably stretch it a little bit higher there for that. Yeah, I think that we'll be looking at wave 1 and 2 and 3 to here, 4 back into this space here, and then 5 up here, and that will give us that first high here, and then we're looking for that ABC pattern that could probably, it can pull back to the 61.8%, so we know we need to acknowledge that. So that would bring us back to, if we take that and bring this to say 30, that's probably the max at that point. That leaves the 50-60% retracement level back at this space here. So that's where it can come back to from there. It probably won't. It will probably just sit in group 2, so the lower end of 65. So probably 65 to 50. But that's still a risk open to pull back to this point here. So you would probably want at least 80% off the table by 3400 or 3420 if you want to push it a little bit as such. Okay, so that's all of that. Let's just go to the 4-hour chart and just recap this a little bit. So all in a nutshell here, and nothing is for certain, but as mentioned yesterday, I felt that wave 4 was completed. However, wave 4s can get complicated, and if it was going to get complicated, that means it would make a move to the box and then it would drop down to here and then bring us into that 3150 sort of area here. So we can't take that off the table. So we are long here. We're going to take the money off the table at 3,400. And yes, it can go higher, so don't get upset about that. You'll find that over time, you know, if I was trading up here, I would take the money at 35. Even though it's gone higher here, I never really worry about that because a lot of things can happen at a level. It can get to the level and drop. It could go a little bit higher, then drop. And I've just found over the years that if I take the money at the table, then I've taken my profit and then I can relax. I can go and look for somewhere else to park that money in another trend that's setting up somewhere else or doing something else. I found that the more that I toyed and the more that I tried to squeeze money out of a little bit more out of the trend, the more mistakes that I made and the time that I spent. So I know that over time, it's just better to take the money at the level and then get on with your next task, you know. So that's what we're going to do here. And obviously you can see that there is, you know, the 34 is going to play out with some sort of correction. It could get a little bit wild around here. Well, we're going to expect that. We don't want to get caught in that. So that's how we're going to handle it. So we'll either be buying back in down here lower if I can figure it out, but otherwise we'll be looking at wave B top here. And if worse comes to worse, we'll be building back in on 34 over here for this. So we'll just see what we know and what we don't know in this space as it unfolds. Alrighty, thanks for tuning in. Cheers.